What's happening, collectors? Today we are talking about Collector's Universe, and as you and I both know it, as PSA or Professional Sports Authenticators. They have been sold to a private equity company. So what does this mean, and what will this mean for you and I? So there's actually a couple interesting ramifications of this sale that I'm going to dive into today and explain why I believe this is actually going to be really good for us, the collectors, the people that use PSA to grade our sports or Pokemon or trading cards. So just to run through quickly what exactly happened. They were a public company, publicly traded on the NASDAQ, and they sold to a private equity company as well as a gentleman by the name of Nate Turner. So Nate Turner, D1 Capital and Cohen Private Ventures bought the company for about $700 million. So that works out to $75, a little over $75 a share, which is very interesting. I no word of a lie, about 2 months ago, I started looking into Collector's Universe to invest myself. I was interested for a variety of reasons. I saw the obvious interest in our hobby, and as well, they pay a dividend. So I'm going to explain why that is actually relevant for this purchase. So as you can see on the screen here, so they were purchased for $75.25, which is approximately 30% over the 60-day volume weighted average price. So all that mumbo jumbo, they bought it at a premium because that's just how it kind of works when you're buying a company. You buy it above market price. And it is not too often. You more see private companies become public. It doesn't happen as often unless there is an interesting opportunity where these investment companies saw an opportunity that the company was not fully taking advantage of. And as we all know, if we have submitted PSA cards, and I have a bunch of cards at PSA right now, they are sitting there waiting because it's taking a long time. When you look at a company that is public, like they were, the interest in the company is not necessarily for me. It is not for the collector. It's not for the customers. Their primary responsibility is to their shareholders and their stakeholders. So they wanted to make the company as profitable as possible, regardless to the ramifications to the hobbyist. And the interesting thing with that, generally they go hand in hand, but not always. They wanted to raise their share price, so they wanted to make more money. They struggled to increase the volume of which they could output graded cards. So what did they do? They actually raised the price. They got rid of certain levels, certain classifications, and if you wanted to get cards graded through PSA, you either had to wait a very long time, be a part of their PSA group, club group that they had, or pay a higher price and get it back in a relatively reasonable time frame. So that's the way they decided to make more money. We couldn't increase our output to what the demand was, so let's just raise our price. So obviously not great from a consumer perspective, but putting on my business hat and looking at it saying, okay, that was the right move, certainly if you're wanting to increase the money and dividends and all of that for your shareholders. But they wanted to obviously increase the output. When you look at the amount of volume that our hobby, the Pokemon, the TCG, the sport card hobby has grown over the last year, it's been tremendous. And for any business to be able to take 2-3 times the amount of product in a given month or day, it's not really feasible. Businesses are not designed for that type of influx. And this is something that obviously none of us expected with the pandemic that we're in right now. So I'm just going to quickly show you what the share price was, and I'm going to explain why they decided to sell. So obviously when we look at, let's say, when we're looking in January, they were trading around $24, mid-20s. And then obviously the pandemic hit, it dropped a little bit to $15 because of the uncertainty. And then since then, it has gone up and up and up and up and up and up, all the way to where we are today. And it was right around, when I was looking at it, it was down here in the mid-50s, and I thought it was a little bit expensive, but I was wrong. I could have made some money, but regardless, they sold for 75, and now the shares went above 75, and there's reasons for that, but we don't need to delve into that right now. But the interesting thing is the board of directors who probably made this decision said, okay, can we make this company more profitable, or do we only see a downside from here? We've tripled in less than a year. We've seen 300% growth. Can we do better? Can we continue to grow this hobby, or are we struggling? And the company was struggling, as we all know. We were all frustrated because of the volume increase. It created essentially a new competitor. We now have SGC in the market that decided to get into sports cards, or to get into not sports cards, but trading cards, because they saw the opportunity and PSA was struggling. So because of this growth and because of their struggles, created a new competitor. So you fast forward to today, We now have a venture capital group and a hobbyist collector, Nate Turner, that said, hey, I see an opportunity for this company. All we need to do is increase output, and we're going to be able to make this company a lot of money. And that is what they're going to do. So how does that translate to me? How does that translate to you? Why is that a good thing? Well, they are private now. They have no responsibilities to any shareholders other than the stakeholders, the people that own the company, the venture capital group. So they can take that dividend as an example, and they can reinvest it in the company. They can take all the resources that would have gone to keeping shareholders happy and put it back into the company and make them more efficient to output more product, to potentially offer even a better product and a better service. There is potentially a lot of really, really good things about this in the short term. Now, will we see changes right away? No, probably not. But I think we're going to see a lot of good things happening with PSA. Now, in the long term, the reality is private venture capital groups like this, their objective is to make money. That is why they bought the company. They're not here to make us happy. They're here to make money. So what their intention is going to be is to potentially sell this company in 3 to 5 years. That's generally what venture capital groups do. Not always, but that is historically what they do. They make it super profitable and then they sell it off. So that is what we can expect. But I think that's going to be a good thing overall for us, the collectors. One other interesting tidbit that I caught here is that Joseph Orlando, who's the president and CEO, he is going to remain at the helm running the company, which I like. I would rather them not replace him with somebody else that doesn't understand the business. Joseph understood the business to get it to where it was, and then a pandemic hit. You can't blame a guy for struggling through that time. And he understands the business, he understands the hobby, and he understands how to make people happy. Now he can remove that, shareholder aspect of it and trying not to make them happy, but he's going to hopefully be able to take that energy and put it into the consumer, the person that is investing the money. Because they want to combat SGC, they want to combat BGS, they want to combat anybody that is a competitor in this space. And I think it is only going to be a good thing for all of us at the end of the day. So that's a really quick, I just wanted to give you guys an update into why this matters for us, and that I think is a good thing. I really do think this is going to be a good thing, and it's going to benefit all of us in some way, shape, or form, whether that be, well, I shouldn't say whether that be, I would fully expect that they're going to be able to get their volume up, which will decrease lead times. That is my full expectation, and hopefully they're going to invest in new people, new technologies, and I suspect it's going to be the technology aspect. That's what they're going to do to help streamline things. Now, I don't have an intricate knowledge of the inside of the company, but I anticipate they are probably going to investigate and look at where the slow aspects are and how they can improve their overall flow of the company. So that is it for today, guys. I really appreciate your time. I hope you were excited about this change. There's still a lot of uncertainty, but I think it's going to be good for all of us. Hope you have yourself an amazing day. See you next time.